Good morning, everyone, and thank you for participating in this webinar on support for gig economy workers and those who are self-employed. As everyone knows, we are trying to navigate through unprecedented times. Businesses have been forced to close in response to the COVID-19 public health crisis, and customers and clients have remained in their homes. Now, as many states, including Utah, take the first steps to safely reopen, we all have a lot of questions about what the new employment landscape will look like, how will the self-employed and the gig economy workforce, such as Lyft and Uber drivers and so many other independent contractors, how will you pay your bills and meet your daily living expenses until you are fully back to work? The national unemployment numbers are sobering. The rate of unemployment announced just recently is close to 15%. The worst that we've seen since the Great Depression. Utah has not been spared. Although our strong and our diversified economy prior to the health crisis gave us a cushion going into the economic shutdown, we have still felt this impact very harshly. Congress has worked to address the need for traditional unemployment insurance programs at the state level and also to respond to employees' needs in the new economy. And so the good news is there are a few resources that may be available to you. Under the CARES Act, independent contractors are temporarily able to recover unemployment benefits. The Pandemic Unemployment Assistance Program, it expands coverage to under the state-by-state unemployment compensation system to individuals who are not eligible for regular compensation or extended benefits under state or federal law or pandemic emergency unemployment compensation. So you may be eligible even if you think you're not eligible for traditional programs. That includes, but is not limited to, certain gig economy workers. From the calls and emails that my office has received, this unprecedented situation has raised numerous questions, such as who is now eligible and what does this mean for the gig economy? So today's discussion is going to address some of the questions that I've received on unemployment benefits and other programs and resources for those who are working in the gig economy and that are self-employed. So I'm very pleased to be joined by some national experts and state experts in this area. Let me introduce them. Kevin Burt is the Unemployment Insurance Division Director at Utah's Department of Workforce Services. That's the state agency that oversees unemployment insurance, rent and eviction information, food assistance, and childcare. He's very knowledgeable about unemployment insurance claims and benefits. Next, we have Randy Gwynn. He's an attorney with Davis Polk & Wardwell and is the head of the firm's Financial Institutions Group. He advises banks, financial institutions, and other companies on their critical transactions, corporate governance, and other matters. We also have Carol Rodriguez. She's an attorney and counsel at Davis Polk in the Financial Institutions Group. She advises on bank, regulatory, and supervisory matters. So I'd like to thank them for joining me today. And before we get to our questions, let me turn it over to Randy and Carol, who will give a brief overview of some of the assistance programs available from the CARES Act for people who work for themselves. And this is an incredibly valuable resource that is available to help to navigate some pretty complicated resources that are available. But we want to make sure that for those of you who are eligible, you're able to access these benefits to help in such dire times. So with that, let me turn it over to Randy.
Thanks a lot, Congressman McAdams. We appreciate the opportunity to share our visual memo with the gig workers and other people in Utah who work for themselves. Just to note at the beginning, what I'm saying is for general information. It shouldn't be relied on as legal advice and doesn't create an attorney-client privilege or a client relationship. My colleagues and I at Davis Polk have been studying the CARES Act since it was enacted on March 27th. One thing that struck us was that Congress specifically intended to help people who work for themselves. And if I can have the slide, as you'll see from this slide, you'll see that there's a list of some examples of the types of work that self-employed people do, and it's quite diverse here. Congress recognized that these hardworking entrepreneurs needed help to cover their living expenses until the forced shutdown of the economy because of the pandemic is over. Our deck covers 5 areas where the CARES Act provides relief to people who work for themselves. First, let me talk about stimulus checks. Many people are eligible to receive a check from the IRS for up to $1,200 for individuals. If you could switch to the table of contents slide, that would be great. That's slide 1. And the amount is $1,200 for individuals, $2,400 for married couples who file joint tax returns, plus an additional $500 for each qualifying child under 17. For people with income over a certain threshold, the amount of the check is reduced according to a formula. And if you could show slide 6, that will show the formula. You need to have a Social Security number to receive a check, but U.S. citizenship is not required. You may already have received your stimulus check, but logistical obstacles have delayed the disbursement of these funds for longer than expected. Next, we provide an introduction in this visual memo to the CARES Act unemployment benefits. Each state, including Utah, has an existing unemployment insurance program. Normally, these programs apply only to employees and not to self-employed individuals. But the CARES Act deliberately expands eligibility to include people who work for themselves, such as independent contractors and sole proprietors, who previously were not eligible for unemployment insurance. The CARES Act also increases the amount of benefits and the length of time for which people, both employees and self-employed individuals, can receive benefits. Traditional unemployment insurance covers employees who have lost their jobs through no fault of their own and who have past earnings that meet certain minimum thresholds. For these people, the CARES Act increases the benefit by $600 per week through July 31st and extends the duration of benefits for a total of up to 39 weeks through December 31st. Self-employed individuals would normally not be eligible for traditional unemployment insurance in most states, including Utah. The CARES Act, as Congressman McAdams mentioned, created a new initiative that covers self-employed individuals called the Pandemic Unemployment Assistance Program, or the PUA. The PUA is available to self-employed people who are not able to work remotely for pay, are not receiving paid sick leave, and are unable to work for reasons related to COVID-19. If you could display slide 16, that'd be helpful. So for instance, if you or a member of your family are diagnosed with COVID-19, if you're providing care for a child unable to attend school because it was closed, or if you are quarantined, then you would qualify under this expanded program. The amount of the benefit is calculated based on a formula that relates to the traditional insurance benefit amount. And similar to the enhanced traditional unemployment benefits, the benefits are extended up to 39 weeks. I won't get into the details of the calculation because Kevin can speak better to that later on. Our deck uses New York as an illustrative example, but benefit amounts will be different in Utah. Gig workers and other people who work for themselves can apply directly for the Pandemic Unemployment Assistance Program benefits on the Utah Unemployment website. If you can show slide 20 in our visual memo, has a link to the websites for all 50 states and US territories. So wherever you're located, you'd be able to see where to apply. Next, you've probably heard about a program called the Paycheck Protection Program, otherwise known as PPP, the small business loan program created by the CARES Act. It was initially funded with $349 billion, but believe it or not, it ran out of that funding by April 16th. There was such demand. A second round of funding of $320 billion was made available on April 27th, and some of that funding has not yet been used, but is being used up rapidly. In addition to small business entities and nonprofits, PPP loans are available to people who work for themselves, who were in operation on February 15th of this year. An applicant for a PPP loan must be able to certify that economic uncertainty makes a loan necessary to support the applicant's ongoing business. PPP loans have a 1% interest rate and are meant to be spent mostly on payroll. Repayment of the loans may be forgiven if the funds are spent mostly on payroll, turning the loans partially into grants. Payroll costs for independent contractors are amounts paid to themselves. They are employees of themselves, with the allowable amounts based on 2019 net profit. If we can show slide 27, that illustrates how your 2019 net profit is determined by reference to Schedule C in your 2019 tax return. And you can find that in slide 27 of the visual memo that we've posted. In addition to payroll, proceeds for PPP loans can be used to pay interest on business mortgages, such as an auto loan, business rent payments, such as warehouse space used to store equipment, and business utility payments, such as the cost of electricity at office space or gasoline used for driving your business vehicle. But at least under current guidance, at least 75% of the PPP loan proceeds must be used for payroll. If you could share slides 25 and 26, one after another, they explain in some detail how you calculate the maximum amount of loan that you may receive, that you would be eligible for, and what you can use the proceeds for. Under current rules, the amount of the loan that may be forgiven is based on the amounts you spend during the 8 weeks following receipt of the loan proceeds. Only 25% of the forgiven amount may be spent on things other than payroll. However, the forgiveness rules are likely to change when new expected guidance is released. One word of caution: an individual is not permitted to benefit from both a forgivable PPP loan and unemployment insurance. So you may need to make some choices based on your particular circumstances. We touch on this in the last section of the Davis-Polk visual memo, but it's a very individual choice, really based on your particular circumstances. But you have to choose one or the other depending on which is more favorable to you. Now, while our visual memo covers another type of small business loans, what are called economic injury disaster loans, since last week, these loans have been restricted to agricultural enterprises, just because funds that were allocated for them have otherwise run out or running short. If you fall into this category, you may want to look at screen share at slide 33. These loans are available for the purposes of keeping your business running during the economic disaster caused by COVID-19, and a small portion of the proceeds may be received in the form of a grant. Finally, we touch on certain CARES Act tax relief that may benefit individuals in our memo. Certain tax filings and payments may be delayed. For instance, your 2019 income tax return may be delayed until July 15th, and portions of the payments of your Schedule SE self-employment taxes may be delayed to December 2021 and even 2022. We suggest that you review slides 39 through 47, which we won't display, for any taxes applicable to you. The slides are presented in a simple question and answer form. Another word of caution: some tax benefits may not be available to people who have benefited from a PPP loan, so it's worth seeking advice if this applies to you. So in summary, we hope that you'll find our visual memo for gig workers and others who work for themselves to be helpful and easy to understand. It's in a PowerPoint format in bullet points, and we try to use simple language. While Congress clearly meant for self-employed people to receive relief from the CARES Act, navigating the pathways to do so can be challenging, and we hope our visual memo helps you to do that. Thank you very much.
Thank you. And thank you, Randy and Carol. Carol, we'll be hearing more from you as we get into the question and answer portion of this webinar. But thank you. This information was organized really in an understandable and helpful way. It was when I actually saw this memo and how easy it was to read that I reached out and asked if you'd participate in this webinar. So I'd encourage people to look at the memo. If you have any questions, there are most likely resources available for you, and we hope that you will tap into it. That's what's going to get Utah's economy flowing again, and not only help you personally, but you're doing a service for our state if you can get that money flowing through our economy here locally. So I want to reiterate that people will be able to refer back to your presentation from this webinar, or they can go to our website for more information or speak with a member of my staff. We want to help you get these resources that are available as well. We fought hard to get resources for you. It's a trying time. You're entitled to these resources if you meet the criteria. And as I said, you're doing a service to the state if you can help to get money flowing through our economy again. That really is the lifeblood, the blood in the veins of our Utah economy. So you'd be doing the state a favor by taking advantage of these resources if you're eligible and helping to get that money circulating throughout our economy. So now it's time for some of our top incoming questions from constituents on assistance for workers in the gig economy. We're getting a lot of them, so we thought it would be helpful to just answer them right now for those of you who are in the gig economy or self-employed. So Randy and Carol will be great to help us with this first one. So the question is, how can gig workers like Lyft and Uber drivers who are considered self-employed file for the SBA's Paycheck Protection Program, or PPP program, that Randy referenced before? There's still some money available in that program. How can they apply?
Great question. So as Congressman McAdams said, there are still funds available under that program. And we answer that question on slide 31 of our visual memo, which if we could bring it up now, that would be excellent. Thank you. Perfect. So in order to apply for a PPP loan, if you are, a rideshare driver or other self-employed or otherwise self-employed, you apply for a PPP loan through a bank or a non-bank lender that's participating in the PPP program. And so slide 31 of our visual memo has a link that directs you to an SBA website that lists all of the eligible lenders, including eligible lenders in Utah. You can also seek advice on the program at your local small business development center, and we've posted a link to where you can find a list of those centers as well. You will need some documentation, as we show here on slide 31. For the self-employed, most importantly, you'll need Schedule C from your 2019 tax return and any 1099 MISCs that you may have received. So those are IRS tax forms. If you have not yet filed your 2019 tax return, you will need to fill out Schedule C and submit it to a lender. You will also have to sign an application that includes a number of certifications, including, as Randy mentioned, that economic uncertainty makes a PPP loan necessary for you to maintain your business operations. But the short answer to that question is go to this link, find a participating lender, and then visit, and then contact the lender to apply for a PPP loan.
So that lender may be your bank, a local credit union. It depends on the bank, but it doesn't necessarily have to be someone that you have a current account with. Some banks may restrict the service only to people who are current account holders. Others may provide it to anyone. They may ask you to open up an account with the bank in order to go through that process, but just contact a bank or credit union. There are a lot of lenders out there. There's information on my website if you want to look for, we have a list of participating lenders in Utah. You can go and just check that out. So the next question, this is a question that's pretty specific to Utah. So Kevin, I think you'll be great to help us navigate this question. Can gig workers like Uber and Lyft drivers or others in the gig economy who are considered self-employed, can they access unemployment benefits?
And so the simple answer for the first time in Utah is possibly. Unemployment insurance historically has not been for those that are self-employed or the gig workers. In fact, the unemployment insurance program is paid for by a tax from employers that cover their employees, and that's deposited into a trust fund to pay out the benefits. But with the pandemic, as was mentioned by Congressman McAdams, there is a new program, a federally temporarily funded program called Pandemic Unemployment Assistance. And that's for the individuals who are otherwise ineligible for the traditional state unemployment benefit, such as those that are the gig workers or the self-employed. And so it is important to know that you don't have to apply for both. In fact, unemployment, if you're eligible for unemployment insurance, you are actually ineligible for pandemic unemployment assistance. So it's kind of a hierarchy based in that you have to be determined ineligible for one to apply for the other. Now, that being said, we in Utah have not set up that you have to apply for both just to get denied to be able to pursue the other one. In fact, we encourage you to apply at the right spot. If you go to jobs.utah.gov/COVID-19, we've added some information about the pandemic unemployment assistance, and we've also added a feature called Am I Eligible? And all you do is you click on that link, you enter your social security number, and if it comes back with any dollar amount, what that means is we have reported wages on you that have been taxed, and you should apply for the traditional unemployment benefit. If it comes back with a $0 amount, then we don't have wages, and you should be applying for the pandemic unemployment assistance. Utah does have the pandemic unemployment assistance application already available. We are already processing and making payments. So if you were in the workforce, the pandemic interrupted that, then you absolutely should apply for assistance and see if you are eligible. One thing that is important is it will follow the same criteria as the state unemployment benefit. So if you are a gig worker or Uber, Lyft, and you use that as supplemental income, but you are still a full-time employee, then you are going to be found ineligible because you're currently not unemployed. And so we will factor in what you are making to determine your eligibility. So while those that have lost that income or seen significant decreases in income might be eligible, if it is a supplemental, it might be that they are determined ineligible for the benefit.
So if you have a job and you're continuing to work at that job, then you can't get it from the gig income that you have in addition. But if you've lost your income, go to the Utah Department of Workforce Services website. There's a pretty good chance you'd be eligible. So go to that, jobs.utah.gov/COVID-19. Check and see if you are eligible, and you can apply for this unemployment insurance. Again, it's another resource that's available to you. You would have to decide, first of all, do you want to pursue the PPP loan that we just discussed or unemployment insurance? You can't pursue both. But once you decide which course is most advantageous to you, you can go down those respective paths that we just covered to get those resources to help you in this time. So next, Randy and Carol, here's a question about folks and their economic impact payments. That's the $1,200 a month per individual or $2,400 for a married couple. The question is, I haven't yet received my economic impact payment from the IRS. Who should I contact?
Yeah. So we know that a lot of folks have already received their economic impact payments directly deposited to their accounts. And if you haven't, totally understandable that you're wondering where it is. So if you look at slide 8 of our visual memo, we walk through how the IRS determines how you receive your money. So if you filed a 2019 or a 2018 tax return and you included direct deposit information, the IRS will make a direct deposit into the account indicated on your tax return. Or if you did not provide direct deposit information, they will mail a check to the address indicated on your tax return. If you are not required to file a tax return, such as if you have Social Security income or other retiree income, or you're not required to file a tax return because your income is too low, but if the IRS has bank account information for you, so this would include senior citizens receiving Social Security benefits, you should not need to take any action to receive your check. The IRS will get your direct deposit information and either direct deposit the money or send you a check. Others, however, do need to provide certain information, such as their address to the IRS. So the link on the bottom of the right side links to the form on the IRS website where you can go to put in your address if the IRS doesn't have it, and then they will mail you a check. And if you believe that you are eligible for an economic impact payment, but you have not yet received your payment, the link on the bottom left side of the slide links to a website where you can check on the status of your payment. We also want to caution that this is an area that has been ripe for fraud. And so if you get a call from somebody claiming to be the IRS, it is not the IRS and you should just hang up.
So this is, I think, a really important one. Regardless of PPP or the unemployment insurance, everyone is entitled to receive one of these economic stability payments, the stimulus check. If you're an individual who earned under $75,000 a year, or married filing jointly and earned less than $150,000 a year, you will receive one of these stimulus payments. If you have not received it, most people have received it. There have been some bureaucratic issues that have slowed down different categories of individuals, so some checks may be delayed. But if you have not received it, please refer to this resource to check and see what it's going to take for you to get your payment, and it should come to you. So thank you for that, Carol. Kevin, the next question deals with unemployment insurance benefits again. The question is, I recently changed jobs and my new job status makes me ineligible for unemployment insurance benefits provided in the CARES Act. How can I get help? Kevin, do you want to take that one?
Absolutely, and just also to quickly reference Congressman McAdams about the stimulus check. The stimulus check also doesn't affect your unemployment benefits. It's not considered income, so individuals that are receiving unemployment, the stimulus check will not interrupt that in any way. Now, in this case, where we have an individual that has found a new job, the first thing is congratulations. Congratulations on the new job, and unemployment served its purpose. It's a temporary assistance to help someone that has lost a job through no fault of their own until they are able to re-engage and reconnect into that workforce. So congratulations there. It's important to remember during this pandemic, a lot of attention has been given to the unemployment insurance benefit, but there are a lot of other benefits available to individuals besides unemployment insurance. And so if an individual gets a new job, loses that unemployment, but still needs some additional support, jobs.utah.gov is a great place to go. Jobs.utah.gov /COVID-19 is where we're housing a lot of our unemployment insurance information, but it also has other assistance, such as the SNAP benefit or the food assistance. We have medical, we have childcare assistance, we have heat and housing. And so there are other benefits that a person can apply for that would help supplement or offset some of those expenses, so that as they transition off of unemployment, or maybe they've seen some hours reduced, but they're not eligible for the benefit, these other benefits are absolutely things that people should consider applying for that will help offset some of those costs and help them make it through until their work returns to normal. And this really kind of goes back to the first question, where we had a person that was possibly full-time, but lost his supplemental wages of Uber and Lyft. And so they're not in the same economic situation they were in prior to the pandemic, but they're not eligible for unemployment. These programs would also be a great resource to be considered for them. They are income-based and they are a separate application, but we certainly encourage you to consider those applications as well to try and help you make it through and meet your critical expenses.
Thank you. And Kevin, I think this next question is probably for you too. So this question deals with unemployment insurance benefits again. The question is, my work hours have been cut. Can I receive partial unemployment benefits for the lost income? And how does this affect what my employers pay in unemployment insurance?
Yeah, and again, it's a great question. And it really kind of depends on how much the hours have been cut. And so unemployment is week to week. It's a different program than most, in that it's not you apply and if you're eligible, then you just receive it for the month. It's actually week to week. And the reason that is because sometimes work can be variable. Sometimes I can work a lot of hours one week, and sometimes I have less hours the following week, especially in this time. We're starting to dial the economy back, and we're not exactly sure how the public is going to respond as we start to open some businesses that have been closed. So a person that has been furloughed or laid off certainly is eligible. But then as we start to dial the economy, especially in Utah, as we flipped from this red status to orange and we continue to make progress, if an individual does return to work but maybe doesn't return full time, what they need to do is in their weekly filing is just report the hours or the gross earnings. And when you report your gross earnings, the benefit will be prorated so that there's no issues with the overpayments. The state benefit, and if you continue to be eligible, you will still get the additional $600. And what that does is it allows an individual to also kind of dial up and return to where they were before, as we kind of see how this economy that was paused starts to return to some form of normalcy. we will see some employees return and gradually increase their hours, and unemployment actually works very, very well with that. It's really critical, though, every week you report gross earnings earned, not when you get paid. So how much you earn that week. Every week you make an attestation saying, hey, this is what I earned. And let's say one week you had a really good week and you worked a lot of hours and you're ineligible, but then the following week those hours are reduced. You don't need to apply again. All you do is file your weekly claim attesting to what you earned that week, and the benefit might kick back on. And so the unemployment benefit is available for individuals as there's uncertainty to those hours. And then as far as how does it affect the employer tax rates, in Utah, any benefit that is associated with COVID-19, we've actually socialized those costs. And what that means is instead of, normally the way unemployment works is those benefit costs are assigned to the employer of that employee that qualified for the benefit. It's essentially an insurance claim against that employer. But in this case, there's really no fault of the employer, and there's also no fault of the employee. And so that's where we socialize the cost. And what that does is that distributes that cost across all Utah employers so that we will see an increase in tax rates for employers across the board, but it will be significantly less than large increases to those that were really impacted by the pandemic, where they just couldn't continue business.
Thank you. So Kevin, please help us answer the final question. The question is, what if I return to work? What do I do, and how will that affect my benefits? And also, what if I don't want to go back to work? Can I refuse? Do I lose benefits if I refuse to go back to work?
Yeah, and it really is similar to or at least part of it is similar to the question, the previous question. And it's, you just have to file your weekly attestation and say, this is what I earned. And then if you return to work and you are full-time, you actually don't need to file anymore. You can just end your claim. And what that does is it signifies to us that you're no longer in need of it. You don't need to call us. You don't need to contact. You just quit filing your weekly claim. And then after 3 weeks of not claiming, it'll just auto close. There's not any overpayments, no issues. So if you return to work, great. But if you see those gradual increase, then make sure you report those hours. Now, we have been getting questions about what if I refuse work? And in Utah, what will happen is there is an evaluation of suitability of work and good cause for quitting or refusing work. If you are offered a job from your employer, the employer is given the opportunity to report, hey, this employee refused that work. And then what happens, we will actually freeze the benefit to do an adjudication process. We will get the attestation from both the employer as well from you as an employee to kind of evaluate whether good cause existed for the refusal of work. Some of the things that we look at when we're looking at good cause is some of the criteria that's been outlined by the governor's office. If you are a member of the high risk population, that absolutely could be good cause to say, hey, I'm a member of the high risk, and so that makes it difficult for me to return to work because even in the orange status, the high risk are prompted for the most part to stay quarantined. And so what we encourage in that is that the employer work with the employee in most instances, and we find that most employers will, but we will evaluate that good cause. But if you're not a member of the high risk population and the employer has been responsible in meeting the guidelines of creating a safe environment, but I still want to continue on unemployment, it is possible that it will turn into a quit, and that would disrupt or make you ineligible for unemployment benefits. And the other thing to consider is it will also potentially sever the tie that you have with your employer. And so it is important as you're making these decisions to kind of evaluate and recognize that unemployment is a temporary benefit. That $600 stimulus is a great stabilizer in these uncertain times, but that's even more temporary as it ends the end of July. So as the economy starts to return and as you are offered jobs, it is something that you want to consider to make sure that you don't sever that relationship, believing that unemployment will continue when it may not.
Thank you. So I know we've presented a lot of information today, and hopefully we've answered some of your questions. I'm sure that we haven't answered all of them. So I again want to reiterate that the visual memo from Randy and Carol at Davis Polk and Wardwell really intuitive way to go through those resources that are available to you, to know if you might qualify for them, and help you start to apply to receive those resources. If you have any questions, please reach out to my office. You can find contact information, email, phone, online, and putting it up right there. There you go. There's our phone number, our website address. You can reach out to us on social media. We want to help you qualify for these resources. Not only are these available for you, but as I've mentioned, you're doing a service to the state of Utah if you receive these benefits and help to get that blood flowing through the veins of our Utah economy. So let me say thank you for joining me on this webinar today, to make sure folks that work in the gig economy and or are self-employed know that the CARES Act has provisions in it that help them. I've really enjoyed this conversation with you, Randy, Kurt, and Carol. Thank you. And I know that it'll be helpful information for the public as we share this and we make this available online. If you, speaking to the viewers now, if you or someone you know has been impacted by COVID-19 and is looking for resources, so impacted, I think that's probably all of us. It doesn't mean health-wise necessarily, but economically impacted, or your employment has been impacted, and you are looking for resources to get by, or your loved one or friend or family member is looking for resources to help them, there are resources available. So please refer them to the resources that are included in the presentation, or go to my website, mcadams.house.gov, or jobs.utah.gov/COVID-19 has a lot of resources that are available. We want to, for those, if you're eligible, we want to make sure that you get those resources that you're eligible for. You can also call my office and speak with a member of my staff directly if you just dial the number that's on the screen, 801-999-9801. So again, thank you for joining us today. Please let us know how we can help you. Thank you to our panelists today for being available to help us walk it through this. And thank you to Davis Polk and Wardwell for this very intuitive and easy to follow visual memo that we can make available to those who are self-employed or in the gig economy. Any closing comments from our panelists?
No, but I would just say this, Congressman, thank you very much for this opportunity. We really, this was a labor of love to put this memo together, and we hope that it helps as many people as possible.
Thank you. All right, well, thank you, everyone.